Year-end tax planning is upon us. What should you do to prepare? Lucky for all of you watching, I've got Aaron Rheaume, Director of Financial Planning, on the horn with us today to talk about this very topic. And this is the fourth quarter, right? Like any good sports viewer or lover will know, this is where rubber meets road, baby. And the same is true for taxes. So, Aaron, it's that beautiful time of year you and I both love so much. What are some things we should be thinking about?
Oh my goodness, Grant! This is like the Christmas holiday for us nerds. Fall season, I love it. Got college football, got a deer in the background, so obviously I like deer hunting. We're moving into that, and then us nerds are moving into tax planning, which we leave the last quarter of the year available to our FEG family, so that we're focusing on the annual tax plan. Before I get into what to think about, I'm hoping you have received a copy of your 2024 tax planning considerations. To the FEG families that watch this, an email went out. If you're new to this video, you can go to fegtaxpack.com and get a copy of the year-end considerations. We put that out every year, and there's good strategies in there. So with that being said, let's move on into some strategies that need to be thought about prior to year end. And before I do that, just want to remind everybody that there is a difference between tax planning and tax reporting. Tax planning is what we're doing right now, prior to the clock striking midnight on December 31st of this year. Tax reporting is what you do the following year. So things that we need to think about prior to year end, it would be any sort of charitable contributions that you would like to make. And not just in the way of writing checks to a charity, but how can we be the most tax efficient? One of those ways is if you're over 70 and a half, you have the ability to do what's called a QCD, qualified charitable distribution, qualified charitable donation. Either way works. If you are giving to any sort of 501c3 and you have tax-deferred IRA money, you want to make sure that you're using the QCD benefit, and that is if you're over age 70 and a half. You do not have to be required minimum distribution age to start that. Just have to be 70 and a half or older. The other thing is if you have highly appreciated stock, here in Indiana, Lilly stock this year has done a phenomenal job of appreciation. So if you're charitably inclined, there's a strategy that we can donate appreciated stock to a charity. They sell it. You don't get to recognize any of the tax. They don't pay tax because they're a not-for-profit. The only way that would work out well in your favor is if you take an itemization. We're not going to go into detail on that today. Also, if you're working and you have the ability to contribute to an HSA, health savings account, make sure you're doing that to the best of your ability. There is a triple tax benefit that you get with an HSA. The dollars go in tax deferred, they grow tax free, and as long as they're used for medical related expenses, the they're tax free distributions as well. Any sort of IRA contributions that would be used as a deduction, just make sure you're paying attention to the income limits. And then lastly, and then I'll go back to Grant to see if he wants to add anything else, would be making sure that you're maximizing your marginal tax bracket and potentially doing Roth conversions if you have the ability to do so and you have a lot of tax deferred dollars. There's multiple strategies that we employ at FEG around tax conversions through IRA dollars, moving those to Roth IRAs. Grant, I'm going to pass it back to you just if there's anything that I forgot. I rattled off a lot of stuff in a short amount of time. Anything else you want to add?
So looking at the preparation, folks, just do not wait to do this in December. The reason Aaron said we do this in October and starting in October in that last quarter is because it takes time to analyze numbers, to break things down. And if a lot of you work with CPAs, right, they're in a crunch right now trying to get those extensions filed by the 15th of October. And so they're going to be gassed out. So don't wait to do this last minute. Put things together. If you've done QCDs like Aaron briefly talked about, remember what they are. A lot of institutions do a really hard job recalling those correctly. So make sure your ducks are in a row. And if this is something you would like a team to analyze with you, to sit down and walk through your annual tax plan and how we can optimize your tax efficiency, not just today, but over time, please reach out to our team. We'd be more than happy to set that time up together and engage. We hope you found this video helpful. And also, too, we look forward to seeing you the next one, but also for your annual tax planning discussion. Take care. See you next time. If in our conversation today, something was sparked deep inside you and you feel like you want to evaluate your current financial journey, please click the link here. We'd love to schedule a complimentary meeting to sit down with you and navigate the potholes that may potentially be lurking around the corner in your financial situation. One of our talented team members will help you figure out where you are, figure out where you want to be, and then give you key critical things that you can think about today and tomorrow to make sure your financial journey remains intact.